yeah, Celeste is there.
Okay, Celeste, just unmute your mic to me, man. I just want to ask you something.
Hello.
Hi, good day. So let's just tell me, were you able to get the notes?
Yes, I got the notes. Thank you. I think I must have not had access or something to the link previously, because I was only able to join from last week's session. So, but I got everything now. Thank you so much.
Okay, okay, it's all good. We just want to make sure that that the stuff that is set up, that the students has got access to it, because so many students are still complaining that they do not get the notes. And I mean, like, we do everything in our power to make sure that everything is fine. But you know,
Yes.
things happens. Okay, but it's okay. Thanks a lot, eh?
Okay. Thank you.
Wilfred, I'll post that link again to the portal. Because they must go register on the portal.
Okay.
And then that's the link that they need for the notes. But it's just a long message, but I'll put that first.
Okay, no, okay, thanks. Okay, Munyuki, can you hear me? Student Munyuki, can you hear me? Okay. Right, I think everything has been sorted out now, and if you are okay, just give me a thumbs up if you can see me and you can see the notes also. Right, good morning, students. It is 9 o'clock. Let us get going. Just to start off with the preliminaries, first of all. The attendance register, please complete that. We have also posted under your chats and the conversations. Claudine has put there the link then to the attendance register. And just a reminder that at the end of the session, just to complete our feedback as well. Also, we are sure that nobody of you guys had any problems to get and access the notes. We are trying in our best to make sure that all the students has got the notes, and the notes has been posted since Monday already there. So it was possible for you to access it, because it is in your best interest, of course, to download the notes, print it, so that when we do our presentation, that you are fully aware of what you've got, and you've got all your study material with you. Right, without any further ado, I'm going straight into our lecture for today. And just to link with what we have discussed last time in our last lecture. In our last lecture, we went as far as the recording of transactions into the various subsidiary journals. So I've taken you through what we call the accounting cycle. And just to refresh your memories on that, the accounting cycle is the processes that accountants must follow whenever they do the books of a business. So your accounting cycle starts off with transactions. Those transactions must be recorded on documents. We use the documents then to complete the subsidiary journals. From your journals, you post to your ledgers, you prepare a trial balance. Following step is to do the financial statements. Then we analyze the financial statements, and the last step in the accounting cycle is to take those analysis, and then you will make certain decisions. In our course FAC1501, we don't do all the steps. We are only working from step number 1 to step number 6, which means that we focus on transactions, documents, the journals, the ledgers, the trial balance, and our financial statements. In our lecture of today, we are still on the recording of transactions into the various subsidiary journals, but in today's lecture, we are going to bring into account the impact of the VAT. So I'm taking you to the notes that you must have now, the notes that is dealing with the presentation on VAT. Now, when we talk about the VAT and we are speaking about the value added tax now, remember this tax system was introduced by the government just to generate more in the state. And currently, our rate that we are working at is 15%. The rate of 15% is quite new. It was only introduced last year in South Africa. So if you come across some old question papers, it may be that the rate that they are referring to is still 14%. If that is the case, do your calculations then on the 14%. But the new rate as from last year is currently 15%. Now, just some background information on value-added tax. We say that the standard rate that applies to most items is 15%. However, we still get items that is classed as perhaps staple foodstuff. And there we have got a zero rate supplies that applies to that. No VAT on these items like unflavored milk powder, brown bread, lentils, maize meal. That will fall under the category of zero rated supplies. We also get some stuff that is completely exempted from value-added tax, and we call that exempt supplies, such as educational services. So for those of you that has got children in schools, you know that on your school fees that you pay, there's no VAT on school fees. Financial services. Now note now under financial services, bank charges that you must pay for, that is VAT. There is VAT on your bank charges, but there's no VAT on your interest income and interest expense. The interest that you are paying, whether it is on your overdraft or your interest on loans, there's no VAT on that. And then also there is no VAT on the transport of passengers. Those of you that make use of taxis or Ubers, you just pay the amount of money, and that is excluding VAT, because the VAT on transport passengers is completely exempted. Okay. Right. When we speak about our value-added tax, we get two kinds of value-added tax. We get input tax, or what we call the input VAT, or VAT input. And the VAT input will apply whenever you are buying goods and services. So if you have got a business and you buy your stock from Macro, and whenever you are buying these items, you are paying for the goods and you are also paying the VAT on those items. In most cases, the VAT is inclusive already in the purchasing price. So the price you see is the price that you pay, but that price that you are paying includes VAT. So the VAT on purchases, the VAT on expenses, that is called input VAT. But when you are taking those items now that you have purchased from Macro and you sell it off to a customer, then the customer must pay VAT, and that VAT is called output VAT. So we get input VAT and we get output VAT. Input VAT is the VAT that you are paying on your purchases and on all of your expenses. And the output VAT is the VAT that your customers must pay, and output VAT is the VAT on sales or income accounts. At the end of the month, the amount of VAT that you must pay over to SARS is the difference between output VAT and input VAT. Now, let me just explain that a little bit further. And we say now, output VAT is the money that you have collected from your customers. Input VAT is the VAT that you have paid now on your purchases. Now, input VAT, if you are a registered VAT vendor, then you can claim back that VAT from SARS. So if you now, just as an example, sold items now to your customers and you collected 100 Rand in VAT from your customers through sales, we call that output VAT. If you can claim back on your purchases, you bought items, and the VAT that you have paid there was 70 Rand, we call that input VAT. So at the end of the month, you must pay over to SARS output VAT, you collected 100 Rand. Input VAT, you can claim back 70 Rand. So at the end of the month, you still owe SARS then 30 Rand, and then you just pay the 30 Rand over to SARS. So at the end of the month, you take a look at the difference between your output VAT and your input VAT, and that will be then the VAT that you must pay over to SARS. Let us take a look at a few examples here involving the VAT. We take a look at our transaction. The transaction state the following, that we are buying merchandise on credit from XP suppliers, and we are buying these items from XP suppliers, and we must pay 7,475 Rand. They tell you there that VAT is inclusive, and the VAT is charged at 15%, and this is a business that works within a periodic inventory system. So in the periodic inventory system, when we work with the periodic inventory system, we will say that whenever you buy inventory, when you buy stock, we call that account the purchases account. Now let us quickly focus on the amount that we are owing XP suppliers. We are owing XP suppliers the amount of 7,475 Rand. And you need to understand that when we speak about VAT inclusive, then you are paying for the goods and you must pay the VAT. So you must see the 7,475 Rand, you must actually see that amount as 115%. you must say to yourself, I'm paying 100% for the goods, for the purchases, and on top of that, I must still pay another 15% VAT. So you are actually paying 115%. That is the amount that you are actually paying, because you must pay for the goods and you must pay the VAT on top of that. So the amount that you see in the slide, the amount of 7,475 Rand, you must understand that that amount is actually 115%. So if you want to calculate now, what is the amount of VAT that you are paying? I'm going to take you through a calculation quickly. And let us just quickly take a look at how we are now going to calculate that VAT amount. To calculate the VAT now, I will say that the purchases, let me just quickly set this up quickly for you. The purchases, as you will see from our question, is that the purchases was an amount of 7,475 Rand. But as I pointed out to you, that is actually 115%, because you must pay for the good and you must also pay them for the VAT on that. So you are owing the trade payables, because remember, we are these items on credit. So we have created a liability of 7,475 Rand. That 7,475 Rand consists of two amounts. It consists of the purchases and it also consists of the VAT. So now let us calculate what amount is the purchases. 100% divided by 115%. Remember now, we say now the purchases is 100%. The VAT is 15%. So the purchasing price of the items is 115%. 100 of the 115 times 7,475 will give you your purchases. And therefore your purchases, if you do that calculation, will be 6,500 Rand. To calculate the VAT is then 15 out of 115 times 7,475. And that will give you a VAT amount of 975 Rand. There's another way in which you can calculate the VAT. You can also say that the VAT will then be equal to the 7,475 Rand minus the 6,500 Rand, because the 7,475 Rand consists of a portion of purchases and a portion then of the VAT, and that will give you the VAT amount then of 975 Rand. So when you do that calculation, it is always important to note that when VAT is inclusive, you just say to yourself, the amount that you see, the amount that you must pay will consist of purchases and the VAT. You let the purchases be 100%, your VAT is 15%, so to calculate the VAT will be 15 out of 115 times the selling price, or times the purchasing price, or if you want to calculate the actual purchases, it is then 100 divided by 115. If you come across a question from the previous exams, perhaps, that you work through, and the VAT rate is 14%. To calculate the VAT, 14 divided by 114. And that is how we do that calculation. Right. Any queries on that calculation? It looks like all of us are okay with that. We continue. We are continuing with our presentation, and I am on the next slide. So when we purchase the merchandise on credit and we use the periodic inventory system, when we purchase the items, it was an entry between purchases and trade payables. But what happens now if we are buying merchandise? The amount is the same, and we are buying this now, and we use the perpetual inventory system. So if we are using the perpetual inventory system, in the perpetual inventory system, when you are buying stock, the name of the account is inventory. So if you take a look at the transaction and you want to analyze the transaction, two things has actually happened. We are buying the merchandise on credit, and we are also responsible to pay the VAT. So the accounts affected with such a transaction will be, first of all, trading inventory and trade payables, and that will be for the 6,500 Rand that we are owing. And then we've got a transaction between input VAT and trade payables, because we are owing the trade payables 6,500 Rand for the goods, and we are also owing 975 Rand for the VAT. On the next slide, let us now take a look at what is happening if we are now selling the merchandise. So I've got a transaction there for you. On the 4th of February, we are selling the merchandise, and we're selling the merchandise on credit to a customer for 11,960. We are selling the items for 11,960. Once again, VAT is inclusive, and the VAT rate that we apply here is 15%. So let us take a look at the calculations and to see whether we are okay with that transaction. I'm taking you again now, just to explain to you what has happened there. So in this transaction, we've got the following. We are selling items now to our customers on credit. So we are working with trade receivables. First, that is owing us money. Our trade receivables is going to increase with the amount of 11,960. Because we are selling, that is the selling price of the items. But the selling price includes the VAT. So what we say is two things is actually happening. First of all, we are selling items now to our customers on credit, and the accounts affected will be sales, and the other account affected will be trade receivables. And the amount applicable here will be 100 divided by 115. That is to calculate the sales amount times 11,960, and that will give us an actual sales figure of 10,400 Rand. That is the actual sales figure. The second part of this transaction that has happened is that there is an entry now that the accounts affected will be the VAT. And remember, this is the VAT on sales, and we call this Vat output. Second part of the transaction is a transaction between output VAT and trade receivables. And to calculate that, the VAT is 15 divided by 115 times 11,960, and that will give you VAT then of 1,560. So our customer is owing us 11,960. 10,400 Rand of that money is classified as sales, which is the money that will come back to us, to the business. And then we must pay over to SARS the VAT amount, and the VAT amount is 1,560. Any questions so far, guys, on the calculations? It looks like everybody's got that one under control. That is the end of the presentation, which is the theory that you must know. We are going to apply this now in a question. So I'm taking you now to your notes. So in your notes, which is called lecture number 4, let us first of all discuss some of the concepts and just refresh your memories now on some of these concepts. First of all, we get inclusive VAT and we get exclusive VAT. Most items in South Africa, the businesses are selling using the inclusive method, because the price that you see is the price that you pay, and the selling price of the item already includes the VAT. You calculate the VAT, as we have done earlier, 15 divided by 115 times the selling price, and that will give you your VAT. If you come across a question where they speak about the fact that VAT is exclusive, then the VAT must still be added onto the price of the article. And to calculate the VAT for exclusive VAT is then 14 times 100. So inclusive, 15 divided by 115, and then exclusive is 15 divided by 100. We also discussed two kinds of VAT. You get input VAT and output VAT. Input VAT is the VAT on all purchases and all expenses. We call that input VAT. And if the business is a registered VAT vendor, then they can claim it back from SARS. Input VAT can be claimed back. Output VAT, on the other hand, is the VAT that you are charging on all your sales and all your income accounts. This is the VAT that your customers must pay. It is important to note that the customers pays the money, but the money does not belong to the business. That VAT is not our money. That money belongs to SARS, and we only collect it. The business only collect that money on behalf of SARS, and it must be paid over to SARS. At the end of the month, we've got an account that is called the VAT control account. In your VAT control account, you will record, or you will transfer the input VAT for the month, and the output VAT for the month. You transfer that to the VAT control account. And in your VAT control account, you can then calculate what amount do you owe SARS after you have taken into account the input VAT and the output VAT. If your VAT control account has got a credit balance, it means that you owe SARS money and you must pay that money over to SARS. But it is possible that your VAT control account can also have a debit balance. If your VAT control account has got a debit balance, it means that your input VAT was more than your output VAT, and SARS will then refund the difference then to you. Okay. Let us just speak about input VAT. Remember now, input VAT, this is the money that you can claim back from SARS. SARS is owing you that money, and therefore input VAT is classified as a current asset. Somebody owes you money. It's like a trade receivable, and therefore input VAT will have a debit balance and it's classified as a current assets. Output VAT, on the other hand, output VAT, that is the money that you are owing to SARS. Output VAT is the money that we collected from our customers. We are owing SARS that money. Therefore, output VAT is classified as a current liability and will have a credit balance. So that was just some of the concepts that you must know on the VAT. We are going to apply this now to a question. So I'm taking you back to your notes, and on page 2 of your notes, we are taking a look at a question. It's the May-June 2015 question paper. They say there, commence this question on a new page. The following information relates to Thanamuva distributors for the month of May 2015. The business is a registered VAT vendor, which means that they can claim back VAT from SARS, and they must pay the VAT over to SARS that they collect on their sales. Note that in this question, the VAT is still calculated at 14%. So to calculate the VAT will be 14 divided by 114. In the other questions that we will get from now onwards, it will be 15%, then it will be 15 divided by 115 to calculate the VAT. But in this question, because it is still an old question paper, we will still apply the 14% VAT, and to calculate the VAT then will be 14 divided by 114. We continue, and they say the following source documents were given to the bookkeeper to prepare these subsidiary journals. So under your required, they ask you to prepare a cash receipts journal, a cash payments journal, and then they also ask you to complete a general journal. So I'm going to record the first few transactions in the journals, and then I want you to complete some of the transactions. I will give you an opportunity then to complete some of the transactions. The transaction on the 1st of May, we state that a receipt number 25 was issued for the amount of 50,000 Rand. It was deposited into the bank account of the business as an increase of the capital of the business by the owner. We are going to record this entry now into the cash receipts journal. So go to your cash receipts journal now, because the business is receiving money. So if you go to your cash receipts journal, the date there, that is the 1st of May. Under your details, we can have there, you can have the owner, or they've got their Mr. Mover is the person who's paying us. The two accounts affected will be the bank. So in your bank, you're going to put the 50,000. The other account affected will be your capital account. You haven't got a column for capital, so you put the 50,000 Rand into your sundry account, and your detail of sundry account will be capital. There's no VAT on capital. So the two accounts affected there will be bank and capital. I'm still on the 1st of May. On the 1st of May, a check was issued, check counterfoil number 110 for the amount of 3,990 paid to Ingwe Properties for the monthly rental. So we are now paying the rental for those items. And if we are paying the rent for those items, we will record this now in our cash payments journal because it's a payment. On the 1st, and we are making a payment now to Ingwe Properties. And in the bank column, the payment is for 3,990. But not all of that money is for rental. We've got a rent expense, and on our rent expense, there is VAT. So you must calculate the VAT amount now, and to calculate the VAT, it is 14 divided by 114 times 3,990, and that will give you, if you do the calculation, it will give you VAT of 490 Rand. This is the VAT on an expense, because rent expense is rent expense will fall under the category of expenses, and the VAT on expenses is called input VAT. So you will have 490 Rand under your input VAT. Your sundry account column, you will then only have 3,500 Rand, and the expense that we have paid now is rent expense. So even though we have paid now the amount of 3,990, only 3,500 is for rent, and the other 490 is the VAT that we must pay. And because this is the VAT on expenses, it will fall under the category of input VAT. Any questions at this stage? All good? Right. I want you to record the transactions for me on the 7th and the 10th. Record the transactions on the 7th and the 10th, and I'll give you an opportunity to do that, and then we will discuss that. Right, students, we continue again. Let's just see how you have handled that one. Our next transaction occurred on the 7th of May. A duplicate cash invoice. This is a cash invoice, which means that we are selling goods. And we are selling the goods to Road Construct. And the sales amount then to 41,942. The business is receiving money. This is on the 7th. You can have, under your detail column, you can have Road Construct there. Or you can just also have sales there. Okay, both will be accepted as correct. The bank amount is the amount of 41,952 rand. That is the amount of money that the business has received, but not all of that money belongs to the business. Only 36,800, which is the sales figure, belongs to the business. The other money is the money that we have collected on behalf of SARS that the customer must pay, and that is the VAT amount. The VAT amount is 5,152 rand. This is the VAT on sales, and it will fall under the category of output VAT, 5,152. That is therefore the output VAT amount. So to record that now, in the cash receipts journal, the bank, we are receiving 41,952, and that consists of sales and the VAT amount there. I'm on the transaction on the 10th of May. A printout of internet payment slip number for the amount of 45,200, and the amount was transferred to pay for the salary of Mrs. Chip, as well as a creditor, P. Dawes, and we are paying the amount of 30,200. Now this is a payment, and because it's a payment, we will record it in our cash payments journal. So in your cash payments journal on the 10th now, we are making a payment there to Mr. Chip. And under your bank, you will have the value of the check, the payment, and the payment is then 45,200 rand. With that one check, we made two payments. We paid in your sundry accounts column 15,000 rand, and that is for salaries. Remember, there is no VAT on salaries. And in your trade payables, because we are paying the account of one of our suppliers, one of our trade payables, and under your trade payables, you must have then 30,200 rand. So one check was issued to pay two items, and we will record it as such then in your cash payments journal. Any queries on those two transactions? Right, we take a look at our next transactions. It looks like you guys has got this all under control. So our next transaction on the 15th, check counterfoil for 1,500 for the cash float and for petty cash. And then also on the 20th of May, cash register roll number 126 for the amount of 39,900. Okay. And on the 28th of May, an invoice number IP288 received from Tools Traders for goods purchased to the value of 30,267 after a cash discount was deducted. Right, I just want to answer Zandilia's question here. Can we separate the amounts to record Mrs. Chip and Mr. P. Dawes? Um, it can be accepted as correct if you've got in your bank column 15,000 and if you've got also in your bank column 30,200, it can be accepted as correct, but it will be a better proposition for you to record the value of the check, because in your cash payments journal, when you issue a check, then you will have one amount because that is the value of a check. However, in this case, it is the document that we use here is the bank statement because there was an internet payment. So there is absolutely nothing wrong in stating the amounts as two separate entries. You can have Mr. Chip 15,000 in your bank column and then P. Dawes 30,200 Rand, and both will be accepted as correct. Zantilia is happy with that? Okay, so just continue with the others. Guys, see if you can now complete the items on the 15th, the 20th, and the 28th quickly. Right, students, we are back. Let us just see how you have handled those questions. just based on Zandile's question earlier, I have changed that just to show you another option in which you can record that by having Mr. Chip and PDOS as two separate entries instead of combining it as one payment. But if you read the question paper, it tells you that the bank amount must be 45,200, but you can separate it in also like that. Our next transaction is on the 15th. And the 15th is a check counterfoil that was issued, and check counterfoil indicates to a payment. So we will record in the cash payments journal on the 15th. And it was a check for 1,500 Rand as the cash flow for the petty cash. So under your detail, you will indicate cash. The amount is 1,500 Rand. It's an entry between bank and petty cash. And your detail of sundry account is going to be 1,500 Rand. So in my cash payments journal on the 15th, 1,500 in the bank, 1,500 sundry account, and your detail of sundry account will then be petty cash. Our next transaction is on the 20th of May. Cash register roll number. This is cash register is the till slip. Till slip indicate to you that we are selling for cash. We are receiving money. We will record this in our cash receipts journal. The entry is on the 20th. On the 20th, we will have sales under your details. And we have received the amount of 39,900 Rand. 39,900 Rand. That is what the customer had to pay us. And that amount will consist of a sales figure of 35,000 Rand and the VAT on sales, which is called output VAT. And our output VAT amount will be 4,900 Rand. So we are receiving 39,900, and of that 39,900, only 35,000 is sales, and the VAT on that will be 4,900 Rand. My next transaction is on the 28th of May. Original invoice was issued from, it was received from tools traders for goods purchased to the value of 30,267 after a cash discount was already deducted. This is a cash transaction where we bought goods and we paid for it. So in my cash payments journal, I will have then the entry on the 28th. And on the 28th, under your details, we bought items from tools traders. So you will indicate tools traders there. The amount in your bank column, we have paid 30,267 Rand. And we bought goods, which in the periodic inventory system is called purchases. Do the VAT calculation there. The purchases will amount to 26,550. Once again, to get the purchases, it is 100 divided by 114 times 30,267. That is your purchases amount. And the VAT amount on those purchases will be 3,717 Rand. Once again, to get the VAT, 15 divided by 115 times 30,267, and that will give you VAT of 3,717 Rand. Any queries so far? Right. we move on to our next transaction. The last transaction for this question occurred on the 30th of May. We've got the following transaction. Mr. C. Carpenter, a debtor, a trade receivable, one of our customers, he was declared insolvent. Insolvent, bankrupt. He can't pay us the amount of money. The outstanding debt on the 30th or at the end of April was 6,179 Rand. That is the amount of money that he is owing us. He paid a portion of that. So he paid 3,500 and paid that on the 30th of May. However, the remaining balance must be written off as irrecoverable. So he is not going to pay that amount of money that he is owing us. We call that credit losses. Okay? So we are dealing with an expense called credit losses. So two things is happening here. He is paying us a portion of his debt, and the balance of his outstanding account we are going to write off. The money that we are receiving from him will be recorded in the cash receipts journal because the business is receiving money. And the portion that we're going to write off, the credit losses, that is an entry that we will record now in the general journal. So let us start to record this transaction now. So I'm first going to record now the portion of the money that we are receiving, and that we record in our cash receipts journal. So on the 30th of May, the business is receiving money from C. Carpenter. And in your bank, we are receiving the amount of 3,500 Rand, and that will appear under your column for trade receivables. So under trade receivables, he is paying us the amount of 3,500. Now we are going to record the credit losses, the bad debts. Okay. So let me first of all just do an explanation for you on how we are going to calculate that amount now. Remember, he owed us the amount of, and we've got the amount here. In your transaction, you will see that he owed us the amount of 6,179 Rand. Let me just quickly change this to something that's a little bit more visible to you guys. So now we say the debtor, the trade receivable, he owed us the amount of 6,179 Rand. He has paid the amount of 3,500. So after all of that, he is owing us the amount of 2,679 Rand. That is the amount that he is owing us. But we are dealing here with an expense called credit losses. So my credit losses is an amount of 2,679 Rand. That is an expense to the business, and that expense will include VAT. So the VAT on expenses, remember, is called VAT input. So we will have the 2,679 Rand consist of credit losses. Do the calculation. Credit losses is now 2,679 times 14 divided by 114, and that will give you credit losses then of 2,350. The input VAT will then be 14 divided by 114, It's just because we work in this exercise still with a 14% VAT times the 2,679 Rand, and that will give you input VAT, the VAT on expenses of 329 Rand. So if we summarize this transaction, we will say that we have got a trade receivable, a customer who's owing us 6,179 Rand. Of the 6,179 Rand, he paid us 3,500. The balance of his account must be written off as credit losses, irrecoverable. We're not going to get that money. It is an expense to the business. That amount includes a portion of VAT of 329 Rand, and the actual expense is 2,350. So I am now going to record this entry now in my general journal. Now, when we record transactions in the general journal, we are going to indicate the account that you debit. The account that you debit, you write this on the first line, and the account you credit, you write on the second line. So I'm going to record this transaction now. Actually, two things has happened here. I will now say I must debit my account credit losses, because credit losses is an expense to the business. And because credit losses is an expense to the business and my expenses increase, I will debit my credit losses account. And we have calculated that your credit losses is the amount of 2,350. And I will credit my account trade receivables, or you can have the C carpenter, and we will credit this account then 2,350. To record the VAT, we say that we are dealing with input VAT, which is classified as an asset. It increased on the debit side, so I will debit my account VAT input to record the VAT portion of 329 Rand, and I will credit my account trade receivables, or the account of C carpenter is also classified as correct here, and the amount will then be 329 Rand. So two things has happened here. You must account for the credit losses, and you must account for the input VAT. The customer, the trade receivables, the account of C carpenter will decrease with a total amount of 2,679, because that is the amount that we are writing it off. The amount of the expense is 2,679. An alternative method, guys, to record this transaction will be the following. Just as an alternative method, we will debit the account credit losses with the amount of 2,350. We will also debit the input VAT account with the amount of 329 Rand. And we credit our account trade receivables with the sum of those two, 2,679 Rand. And that is an alternative to the one that we have just completed, where I have recorded it as two separate transactions. So you can have it as two separate transactions to record the credit losses and to record the input VAT, or you can put it together as one journal entry debit credit losses, debit input VAT, and you credit the trade receivables as one full amount, the amount of 2,679 Rand. Any queries on that transaction, guys? That last one was not an easy one, but I'm sure if I've explained that one to you now, if something like that comes up in the future, that you will be able to handle it. If there are no further questions, that is the end of that transaction. So I was waiting on this question to come. Thank you to Gida for this question. What happens to the VAT for P doors? Okay, right. So to Gida and all the other people, just listen carefully to the explanation here for the transaction on P doors. Right. Now, we, the business, we owed P doors 30,200 Rand. So now we had to pay P doors 3,200 Rand. But why do we owe P doors that amount of money? We are owing P doors that money because we purchased stuff from him in the past. Now, when we bought stuff from him some time ago, we were charged VAT. Now, we have got this saying that VAT can only be charged at the point of sale. So the VAT has been charged already. So now when we make a payment, we cannot charge VAT again because VAT is only when the sale is taking place. So the same will apply now to a C carpenter, for instance, or when a customer is paying us. When a customer is paying us and is paying his account, then there's no VAT on him paying his account because when we sold the stuff to him, we charged him VAT. Now when he's making a payment, we can't charge him VAT again. So there's no VAT on the payments. Just take a look at, you perhaps has got an account with Woolworths. You go to Woolworths and you are buying stuff now, say for 10,000 Rand. Now, when you buy the stuff, the VAT is charged. The stuff perhaps only came to 9,000 Rand and the VAT to another 1,000 Rand, and that is why you are owing Woolworths now 10,000 Rand. What happens after that is that you must pay back the 10,000 Rand. They're not going to charge you VAT again on the 10,000 Rand. VAT is only charged at the point of sale, where the sale is taking place. But after that, all the payments is that you are just paying your account now. Okay? I hope that settles that thing now. All good on that? Right. We are moving on, guys, and we are taking a look at all that you must now do in that question is that you must now just add up, close it off, add up all the items there, all the individual columns. I will also later today post the solution to that, and then you will just scan, then just see what has happened there with the totals and whether you agree with that. I'm moving on to the next page of your notes now. And the next question in your notes will be on page 5. Go to page 5 of your notes. Here we take a look at the October-November 2015 question paper. The question paper of October-November 2015. Lecture notes number 4. And I am on page 5 there. Right. the October-November 2015 paper. Tiles traders buys and sells tiles and is a registered VAT vendor. On the 1st of October, the following creditors, which is trade payables, their balances appeared in the accounting records of tile traders. So we owed cheap tiles, we owed them 4,000 Rand. We owed expensive tiles, 9,000 Rand. We owed luxury tiles, 6,000 Rand. And we owed exclusive tiles, 8,000 Rand. Those are all our suppliers, our trade payables, and we owe them that money. During the month of October 2015, the following transactions, inclusive of VAT. So the VAT is already included in the price of the items, and the VAT is charged at 14%. And this was entered into by tiles traders. So tiles traders had those transactions for the month of October. Go to your required. They ask you to record the above transactions into the journals, and you must ask, they ask you to complete the purchases journal, and they ask you to complete the purchases return journal, and they, at the bottom there's a note. You don't have to close off the journals and show your calculations. So if you don't need to close off the journals, it means that you are not supposed to add up the journals. So I'm going to take the transactions now for the month of October, and I am going to record it now into those two journals that they are referring to there. The transaction on the 1st, purchase tiles for 4,924 Rand and 80 cents. And we are buying those items then on credit from luxury tiles. And I will record that now into my journal there. Just now. So I am into my purchases journal now. You record that transaction in your purchases journal because we are buying the stuff on credit. So into your worksheets that I've got there for you. Just quickly complete that. So in your purchases journal, the entry is on the 1st. Under your details, we are buying the items from luxury tiles. And we are owing our trade payables the amount of 4,924 Rand and 80 cents. We bought the stuff on credit. That 4,924 Rand and 80 cents includes the VAT, and the VAT is charged at 14%. And if you take a look at the purchases, then the actual purchases will then be the amount of 4,320 Rand. And the VAT on those amounts will then be the amount of 604 Rand and 80 cents. And that is how we will record that entry. So our purchases of 4,924 and 80 cents will consist of goods that we bought, as well as the VAT that we are owing luxury tiles. Our next transaction on the 3rd, we purchased towels for cash from Bathroom Towels. No entry for that one. The reason why we've got no entry is that this is a cash transaction. This entry will be recorded in the cash payments journal because we are buying stock and we are paying for the stock. The cash payments journal is not required, so you are not going to record that transaction at all. I'm moving to the next transaction on the 4th. We are returning the wrong colored towels, which was purchased on the 1st of October to Luxury Towels, and we received a credit note for 1,140. So we are sending stock that we bought, we are sending it back to the supplier. And because we are sending the stuff back to the supplier, we will record this now in the Purchases Return Journal. Sorry if I... that must be the Purchases Return Journal. So in your Purchases Return Journal now, this entry is on the 4th. It tells we are returning items to Luxury Towels. The amount that we are sending back, this is not trade receivables, this is trade payables. Just change this headings here, that is trade payables, and this is for purchases returns. The amount of the trade receivables will decrease with the amount of 1,140. The purchases returns is 1,000 Rand. And the VAT on those items will be 140 Rand. And that will make up the total return then to our trade payables, the items that we are sending back then to Luxury Towels. All good on that? Right. I want you to complete for me the next transactions from the 5th onwards and just see how you will handle that one. Right, students, let's just quickly complete that activity. We stopped with the transaction on the 4th. I am on the transaction on the 5th now. We are purchasing tiles on credit from Cheap Tiles. So that entry goes into my purchases journal. I'm buying items on credit. So on the 5th now, I'm going to have Cheap Tiles. And under my trade payables, my trade payables will increase with the amount of 3,420. That is what I'm owing my supplier now. The actual purchases on those items will be 3,000 Rand. And the input VAT on those items will be the amount of 420 Rand. My next transaction is on the 11th. We are returning damaged tiles to bathroom tiles. Okay, so we are sending stuff back to the supplier. So I will have an entry now On the 11th, we are sending stock back now to bathroom tiles. My trade payables will decrease with the amount of 912 Rand. That is the amount that my trade payables will decrease with, consisting of the following. It will consist of 800 Rand worth of purchases returns, and 112 Rand will be the VAT on those items. I am on to the 14th, the transaction on the 14th. We are purchasing again towels on credit, and because we are buying on credit, we will record this in our purchases journal. This is on the 14th. Under my details, I'm going to have exclusive towels. The amount that my trade payables will increase with will be the amount of 5,472 Rand. But that amount will consist of actual purchases. Remember, times 100 divided by 114. My actual purchases will be 4,800 Rand, and the VAT on those items will be 672. I'm moving on to my next transaction on the 15th. On the 15th, we returned the wrong size towels that were purchased to cheap towels, and we received a credit note for that. So we are not happy with items that we bought. We send it back to the supplier. That goes into my purchases return journal on the 15th. And we will have cheap towels there. And your trade payables will decrease then with the amount of 456 Rand. And that 456 Rand will consist of purchases returns of 400 Rand and output VAT of 56 Rand. Okay, guys, that is a mistake there. That should be input VAT. That is input VAT. Right, my next transaction on the 18th, purchase towels for cash. Careful now, this is a cash transaction, not to be recorded in the purchases journal. When you are buying towels for cash, you're buying stock for cash, that entry will go in my cash payments journal. The cash payments journal is not required, so we are not going to record that transaction in the cash payments journal. My next transaction is on the 20th, of buying towels on credit. That goes to my purchases journal. So the entry then on the 20th, I am buying inventory on credit from expensive towels. My trade payables will amount to 6,840. That is the amount that we are owing our trade payables. The amount that we are owing our trade payables will consist of 6,000 Rands of our purchases, and the VAT on those items will be 840 Rand. The last transaction on the 23rd, we are returning the wrong shape of tiles then to expensive tiles. So under your details, I'm going to have expensive tiles. And the amount of the items that we are returning then to expensive tiles means that my trade payables will decrease with the amount of 1,094 rand and 40 cents, consisting of purchases returns, and my purchases returns will be 960 rand, and the VAT on those items will be 134 rand and 40 cents, which is our return then, items that we are returning then to expensive tiles. And that will conclude our transactions then for that month, where in the question they just ask you to record the items then in the 2 subsidiary journals only. Right, students, that is the end of my session and my presentation for today. For today's transactions, what we have covered is that we have still gone through the whole accounting cycle in terms of the transactions and the documents and the journals. And we have just taken into account the impact on the VAT on these transactions and how to account for VAT in your subsidiary journals. Remember your calculation of VAT, if VAT is inclusive and we apply the 15%, it will then be 15 divided by 115. For questions that we are still dealing with 14% to calculate the VAT, 14 out of 140. Just before we go, we have got 2 questions over here. First one from Tuchida. Do we enter both cash and credit returns in the purchases return journal? Yes, because the purchases return journal is for returns, even though the items was purchased for cash. If you go back to the transaction to Gida that you are referring to, is the transaction on the 11th, where we are sending stuff back to bathroom suppliers. Now that transaction is linked to the transaction on the 3rd. Now on the 3rd, when we bought the items from bathroom tiles, we paid cash for it. Now we are sending the stuff back to them. It is a return. And even though it was a cash transaction, we will still record this transaction in the purchases return journal because it is classified as a return. In the real life situation, this happens quite a lot. It is just a matter of we will replace that tiles now again with them, or what will happen is that they will then actually owe us the money. So if we are going to buy again from them on credit, or whether we pay for it cash, a cash transaction, it will just be subtracted then from our balance because we've got a credit with them. But because it is a return, we will record this now into our purchases return journal. Right, Christopher, how soon could we get the solution sheet for this session? Christopher, just give me about 15 minutes, then I will post the solution then to today's lecture. Okay. Any other questions? Right, guys, just before we conclude.
Sorry, Margaret, I can see that they all didn't complete the attendance register because I can see how many people's in the class and I can see the Excel sheet. They must please complete it. If you want the notes, complete it. I'm going to send the list from the attendance to Mr. Lesh.
Okay. Please, students, we will really appreciate it if you can just complete the attendance, and we will then also complete also not only the attendance but also the feedback session.
Yes.
And then also Claudine will put on the invite then for the next session as well. If there's nothing else, guys, I'm going to close our session now for the day. Enjoy the rest of the day then, if there are no other questions. Okay.